why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
And today we are going to share with you some of these market updates and understand about what is the so-called the direction of the market after this Malacca state election, right? So overall, 1 second. Can you guys hear me? If you can hear me, please let me know through the comment section. And please also like and follow us and also share the video out. Okay. Yep. So can you see my screen right now? Okay. Yep. Let's do this because today's market is a bit choppy after the Malacca state election, and we still are unable to see a clear-cut buying interest. But again, we have been seeing some of the good signs from the stock market. We have seen some of the rally in the technology stocks, and also particularly very strong sector, plantation sector. So I can see that plantation sector went up 0.95%. That could be due to the firmer CPO price that has been seen over the past years, 1.5 years at least, because over the past year itself, the CPO price rallied, very strongly, and we can really understand that the earnings will also be very strong going forward. So this is the chart right now for the FCPO. So in FCPO itself, it has shown a very, very positive trend. So if this trend can sustain and it is showing a sign that this is above the 4,800 points, 4,700 points, these recent movements will translate to the earnings of plantation sector. And this is the week that we are having the financial highlights or financial reports being published from various companies under the plantation counters or under the Bursa Malaysia. This is the week the full-blown reporting season will be this week. So if we are able to see this, translate into most of the plantation earnings going forward, then this is a very good point for you to buy in and sell off after this reporting season. So that is the strategy for plantation counters, because we know that the plantation sector will be very strong due to this recent very strong upward move in CPO price that will translate to earnings for the plantation companies, and therefore we are buying ahead. Okay, so that's why this morning itself we have been putting in at least 2 counters of this plantation counters, such as DH Plant and also JTSR. So these are the 2 companies that we think there is an opportunity of trading opportunity. So that's why I put it in. And so true enough, it it went into a very good breakout mode, and it triggered our signal at 9:01. So it means that if you have noticed this signal at 9:01, most probably you are already in this counter. And the other one is 9:03, which the other one is TH Plantation. Also similarly, we have at 9:01, it has triggered us a signal, and it has started to make a very good rebound move as well. So given this scenario, we have been trying to pinpoint towards that particular sector, which is plantation, and we have selected two of the companies which is slightly in a stronger tone. So we are on a correct path, at least for today. Okay, the other few counters I think will be related to this technology. And if you see technology, it's positive 42.42% stronger today. And this is within our expectation. If you notice what we have, talked about much earlier, I think a few weeks back, we have been always talking about the technology sector to move higher above the 97 and headed towards the 100 is our target. So today itself, it has surpassed, this 100, and it is nearing, the highest point is 101.27, which is the highest point, higher than the previous point here. So it shows us that there are some buying opportunity coming into this technology sector, and we should be able to see further upside. And by having the idea of technology sectors into your portfolio is a very good move. Why do I say so? It's because technology stocks is always a sweet spot for most of the things. Like we will need to understand that a lot of trends going forward will be related to tech counters, tech related stuff such as EV, such as this IoT stuff, 5G related. So all this will contribute to technology growth going forward. So earnings visibility is there. And that's why you can see people are still buying into technology counter since June itself until this particular day. And we understand that even with this Chukai Makmur, it doesn't mean that technology stocks will suffer in 2022 because normally government will rebate in terms of R&D incentives, and that is where technology counters will benefit. So they put in more investment, they get more incentive back. So technologies counter seems like having a very good sweet spot at this point of time. So that is how I look in technology, and we should be able to see further upside, and any dips will be a good opportunity to buy in. So that's why this morning we have selected at least two sectors that is the stronger sectors, technology and also plantation. So that's therefore that contributes to what we are positioning for today itself. Okay. So we have Unisem, we have Kobe as the technology companies, technology related companies that we think it is strong enough to move forward from this point onwards. So that's why we put in these two. And why do we put in MYG? Is because there was a news related to this GST. So we thought of people might be identifying GST counters, GST related counters. So MYG is one of the big. So that's why we have three counters under the technology stocks. So I believe, for now, although it is just a speculative move on the GST, but sooner or later, people might take this opportunity to ramp up in terms of GST, because in the future maybe GST might come back, maybe down the road, 1 to 2 years period. Okay, so that is the idea behind the selection of stocks. And the rest, like Nilex, Pulse, and also Kim, is just based on strong positioning in terms of the daily chart. Okay, so let's look at the daily chart. It seems like it has been breaking out, pulling back, and then rebounded, and we thought that continuation pattern could happen today. So, but at least it didn't really break below the 45.5 cents, which is the previous day's low. At least it hasn't break below that level. If it's breaking below that level, then perhaps we have to take a cut in this counter. Okay, the other one is Nilex. Nilex is actually a chemical related industry that I think will benefit under this very strong, firm CPO prices kind of environment. Why do I say so? It's because when plantation stocks are, plantation CPO price is going higher, normally people will take an opportunity within the chemical industry. So that is how I look into Nilex. And why do we select Pulse is also because of the very good potential move. But again, it hasn't triggered us anything yet. So we shall monitor until the next session, which is the afternoon session, to see is there any opportunity within Pulse. Okay. So let me drill down to support and resistance in various stocks that we have picked, just to give you an understanding where is the potential target point, target price that we are looking at, and where is the support range that you should be cutting a loss. Okay, so for TH Foundation, certainly we are anticipating a good result, and therefore this should be uh, this should maybe hold on until at least the result is out. So the result is not out yet, you should hold until results. Once the result is out, then you should be selling off the shares by then. So the cut loss point for this is 70 cents, and the near-term resistance is 74.5, 78.5, and also 84.5 cent level. So these are the various ranges for TH Foundation. So how about the other one, JTSA? So JTSA, this morning we have technical focus as well. We have put in our thoughts into it, and it did break out above this 69 cents level. It has hit near the resistance 1, resistance 2, but I would say that plantation sectors, we have to really monitor for the results. Once the result is out, then only you are going to sell off the shares. But at the same time, you also need to monitor what are the range that you are looking at for profit-taking activities, such as the 76 cents and also the 79 cents level. Okay. Okay, so this will be under the plantation counters, and for technology sector, so why do we pick this? Just now we have mentioned because of the technology index is rising strongly, and so after today's event of breakout, because they are breakout of the previous day high, and the next target will be around 453 towards 463 cents level. That would be the near to mid-term target, and the cut loss point is around 4 ring and 37 cents level. So this is the idea of Unisem. But if you look into Unisem in a bigger perspective, this is a very, very decent and nice chart, because we can see it will be a very good opportunity to look into longer term as well, because this is considered as ascending triangle formation. Okay, so the range, the resistance is around 4 ring and 66 cents level. It has formed some good higher high, higher lows formation, and this has becoming it is becoming a ascending triangle formation. So what we are anticipating from this event, just in case it has it breaches above the 4 ring and 66 cents level, the next target is at this level here, which is near towards the 6 ringgit zone. I would say that it's quite nearby, and that is a very good spot for long-term positioning. And this is definitely, under the technology counters, it should have some good indication. Okay, indication of stronger earnings, and also a stronger move going forward. So I think if companies with the operations outside of Malaysia, they are less likely to be impacted by this Cukai Makmur as well. So Unisem could be one of the technology stocks ideas that you can actually follow through for a longer term perspective. Okay, so the other one is Kobe. Kobe has also started to make a breakout again and again since last Thursday, Friday, and today itself, and we have been seeing a very, very good potential move above the 6 ringgit zone. So at least for now, it is still an uptrend position. I would say that the next target may be around the 650, and towards the 7 ringgit level zone would be the target for Kobe. Okay, so the next one is MYEG. Yeah, because I saw some question asking about MYEG. So if you want to ask any questions, make sure also you share our video out. Click the like button so that you have the sharer badge on your question. Then we will take the questions from that point. Okay, so that is also if you have any questions, you can actually put into the comment section. Make sure you share the video out. Then we will take your question from that point. So I saw the question on MYEG. I heard about MYEG involvement in cryptocurrency like My Digital Coin. Can you comment on that? Kenanga have some coverage on that, but it was early this year, March. So I think right now, in terms of cryptocurrency, in the eyes of Malaysian, it is still very cautious tone on companies that is performing this kind of cryptocurrency exchange or coin related to public listed company in Malaysia, because again perception is very important, and right now Bank Negara is still in the not so favorable towards the cryptocurrency or cryptos exchange kind of kind of view. So that's why it is also quite hard for the public listed company to make a good name out of it. But again, if they are putting themselves in something that might be a trend going forward, then the outlook should be positive. Okay, so there are two things here. One is the perception of investors right now are still negative on cryptos, but if this is the trend going forward, then if they are tapping along with the trend much earlier than their peers, then it is a good sign. Okay, so what I can see from here, MYEG is certainly on a positive trend. Like I said earlier on, what we did put this in because of GST, but it also gap up and come back down. I would say that this is just a matter of time waiting for the good right move or good right buying opportunity to break out above the 1 ring and 12 cents level. Okay, so MYG is an uptrend. This My Digital Coin, I think it should be a good thing going forward. If it is under cryptocurrency, I think you need to let them materialize at least for the next 3 to 5 years period. So if they're tapping along with the train right now, much earlier than the wave later on, I think they are in a very good right position. Okay. So there are some questions related to foundation and technology sector. I have okay, I've put in. Can you review revenue? Okay. Oh, okay. So I think this this viewer is actually asking about revenue instead of the foundation and technology sector. Okay. So maybe you can go to this counter revenue. Okay. Revenue has been on the downward trend since the break, the violation below the 1 ringgit and 78 cents level, and it has rebounded on top of this 1 ringgit and 46 cents level. So it should consider as a good sign that this is an oversold position. It has rebounded, but it has not made a higher high position yet. So I'm just basing on this chart here, and we still are looking into just a rebound move rather than a strong breakout move. Okay, so my idea is if there is any pullback towards 146 level again, then perhaps there is a very good chance for us to buy on the rebound, on 146, and then to target maybe near term target will be around the 1 ringgit and 66 cents level. Okay, so that would be on revenue. So if you don't have really any stock picks to select and trade, you might want to look into our traders list as well, because traders list is always what we put in over the past week and try to see whether is there any good sectors or good companies that made a strong move today or over the past week we have put in, but on that particular day it didn't trigger, but later on it triggered. For instance, I think BB Plastic is a very strong counter. We did have coverage on this since 1 ringgit and 71 ringgit 80 cents level. Right now is 3 ringgit. The target price that we are putting in around is 304 to 306 level. So I think this BB Plastic can sustain until the next results reporting season, which is this month. And let's see what is the guidance from the management. But based on my understanding, the overall situation in plastic industry is really very optimistic, because a lot of people are actually putting effort into putting effort onto the recovery team, and plastic is definitely within the recovery team itself, because even with or without COVID, you need plastic bags as well, plastics related wrappers and things like that. So I think BB Plastic is one of them. HH Group is also another one that has triggered us a very good signal. and it has went up towards around 83 cents level. CIMB, let's check it out. Oh yeah, it has also a breakout this morning, 9:11 a.m. Let's check BJ Boomi. Okay, it has breakout, but it pulled back. Eno is what we have put in, I think last week also had triggered us again this morning, 9:01 a.m. So there are various of very good opportunities under our traders list as well. So I think you need not to just focus on daily picks, because the daily picks will go through and flow into traders list day by day. So if they didn't trigger on that particular day, or if they triggered and they pull back, but later stage within the next 7 trading days, if they're still inside this list, it will prompt you that, hey, you have put in the list, the stocks early on. Right now it's showing some good breakout moves. Do you want to trade them? So that is how you're going to use the traders list as compared to daily picks. Okay, so just give you an idea about M Plus Wiz Pro. What do we provide? Because we do provide a very comprehensive strategy, and also we pinpoint to the selected sectors, at least for today itself. And I believe that when the signal is in, normally it should stay on for another 5 to 7 days. So that's why that is why the traders list are important for your viewing purposes as well, for your reference purposes as well. Okay, so that is just some of the ideas on daily picks and also traders list. So I will continue to take some questions before I end this session. I think DNEX people have been asking. I think DNEX is just awaiting for the time. You need to really wait and really think about it to take a position, and it wouldn't go very strong from here unless the oil prices is coming back again, and unless the result is very strong. Okay, but based on the technical analysis point of view, it has already broken out, and our mid-term to long-term target is around 1 ring and 26-27 cents level. So that is the range that I'm going to monitor for a good position for exit. Okay, if you are already in this, your risk and reward is very strong. Okay, from this point, because it is already a symmetrical triangle formation, and it has rebounded off this 80 cents level, and we should be able to see 1 ring and 28 cents level as the target for a longer term perspective. Why do we have this kind of view on DNEX? Is because DNEX has Silterra. Silterra is also under the semiconductor fabs related business, which is a good sign. First of all, although they are not taking the very small equipments, gadgets kind of businesses such as handphones or whatever, but they are also in the chips industry. Okay, so it's a semiconductor chips, and I think that is going to be a good sector for at least the next 3 to 5 years, because they are serving actually not the electrical or smaller gadgets, but instead they are focusing more perhaps towards the automotive as well. So as long as the whole industry is moving in high demand phase, we believe DNEX will also benefit from the Silterra move. Okay, the Silterra acquisition. And the next business segment that we are seeing is the oil and gas sector. So oil and gas sector, they are actually tagging along with the hibiscus, that particular field. So if hibiscus is performing well, DNEX should be performing well. So DNEX has not only the oil and gas, but also the technology. So in terms of the diversification or the business segments wise, I think DNEX is much in a much better position compared to a lot of companies. So they are having two business segments. They are firing up these two business segments. So I think DNEX, you may actually look out for a good opportunity. I believe that there is a very good upside to it, and good risk and reward, because of they have already broken above this 82 cents level, and our next target will be around the 48 cents, another 48 cents, which is around 1 ring and 28 cents. Okay, so last counter that I want to review is GF Tech. So if you have any questions, you can put into the comment section. And please make sure also you have share our video out. So make sure that you have the sharer badge on top of your question. Then we will take your question. Okay. So for JF Tech, it is a bit on a sideways tone, but at least it is a gradual upward move. Okay, gradual upward move, and it is not as bad. So I would say that this is still within the uptrend move. Okay, so right now, what is deterring this counter from breaking new highs is definitely this resistance zone, which is around 157 towards 162. So as long as it is still hovering within this range of 145, 47 level towards 162, it is still a consolidation phase. But I would say that there is a very good chance that if it hits around this 147, and it may trigger a rebound move higher. And once it is able to break out of 162, then it should continue to trend even higher towards the 184 or even towards the previous gap around the 2 ringgit zone. So JF Tech is it's being featured in the recent the weekly Edge. So hopefully that people will capture some it will capture some attention going forward, and hopefully that you will break out of 162. And especially right now, under the technology stocks, it is still very positive. So we shall monitor for what is going to happen in the JF Tech going forward. And bear in mind, JF Tech is also under the ACE market right now. So the next best catalyst is definitely to move their ACE market counter, this ACE market counter, into the main market. Then once we have that, then more people will be noticing them. More funds will be able to tap along with their good opportunities going forward. Okay, so JF Tech is slightly in the consolidation phase, but not for long. I would suggest that right now there is still some consolidation signals on the DMI, average directional index. But if it is able to put a very good bullish engulfing bar in these coming days around this 1 ringgit and 40 towards 1 ringgit 50 cents level, then that should be a very good signal for an upside potential. Okay, so another question is on NCOP. NCOP is having some pullback move. Right now is below the SMA 50, but right now it is just having a rebound and then sideways move along this 38.5 cents level. So I would suggest that this might be a good rebound move, but it's not a strong breakout yet. So we have to really monitor for another 2 to 3 days, 3 trading days for the T+2, T+3 formation. And then the next target, if there is a breakout, it will be around the 44 cents and towards the 50 cents level. Okay, so that will be some of the your Q&A section here. So before I end this 30-minute MPlus with highlights, I just want to go in again to the the overall to do a summarize on this KLCI current position. So KLCI currently is definitely in a sideways ranging mode despite all this Malacca state election situation. It is still having some the buy interest is still not as strong. Okay, maybe people are also looking into the Sarawak election that will be coming soon. So that is why people are still in the inconclusive manner on this state election result. So that's why you can see that the market is not really improving at a very greater pace. But again, we have to be selective in our sector selection. So try to be try to look out for what are the new ideas, new sectors in terms of day by day, because right now is into the reporting season, and therefore we have to choose and select those companies that is potentially having stronger earnings, such as technology, such as plantation, or maybe financial services and also telco. Then moving into after next week, then it will be December month. Then what should we be focusing? We should be focusing on KLCI counters because of the window dressing period. So normally out of the 20 years of experience of not experience, is 20 years of data on KLCI. Certainly we have very good chances of making good money for KLCI members in the month of December. Averagely speaking, I think the range will be around 2% return for that particular month. And the success rate, the win rate, for the positive rate for over the past 20 years is more than 15 times of making positive returns during the month of December. So that is why I think in after this week itself, people will start refocusing on the heavyweights, and KLCI members might benefit out of this situation. So this week itself, people will be cautious because of the earnings. Next week onwards, people will be start to be more aggressive until maybe January. Then January, there is also January effect and things like that. So as a summary, I think we have to really focus on, because right now it's earnings driven. This is where we need to stay focused on earnings report and earnings financial results, and try to pinpoint to sectors that will benefit, which is, I think, foundation and technology. Okay, so I guess that will be it, and I will see you again in the next week. Okay, next week. Thank you so much for your time, and hope you have digested most of the my analysis for today. Thank you so much, and see you again.